As mentioned, we do have our moderator who is joining us. But first we have Alfonso Garcia Mora, the Regional Vice President for Asia and Pacific International Finance Corporation. He's here on site with us at MBS. Thank you so much. We have Eugene Chang, who is the Group Chief Financial Officer at Sembcorp Industries. Thank you very, very much. We're looking forward to hearing from you. Our moderator is Jennifer Tay, the Partner and Infrastructure Leader at PwC Singapore. PwC is one of our sponsoring partners. Joining us online is Francia, the President and CEO of AC Energy in my home country of the Philippines. So I'll allow Jennifer to steer the conversation. Thank you. Please have a seat.
Good morning, everyone. My name is Jennifer. I'm a partner with PwC, and I lead the infrastructure practice. First of all, thank you for inviting me to moderate this session. A big thank you to Temasek, IFC, and BlackRock for this opportunity. The Asian Development Bank estimates that Southeast Asia alone requires $210 billion a year to put in place climate-compatible infrastructure between 2016 and 2030. Investors, like the panel I have today, have responded by supporting sustainable green infrastructure projects. Are we doing enough? Can we accelerate this? According to Moody's, global issuance of sustainable bonds is expected to increase 32% to $650 billion by 2021. Sembcorp, of course, has contributed to this with the sustainability-linked bond announced yesterday, together, of course, with IFC being one of the anchor investors in that. Now, we need a lot of these financing solutions, innovative financing solutions, involving the private sectors in order to drive green infrastructure projects. This session, I'm looking forward to having Eugene, Alfonso, and Eric sharing with us their experience in driving these infrastructure financing in the green energy space and the green infrastructure space. Now, I want to jump straight into inviting my panelists to give a short introduction about your organization's plan in the green energy space and provide some examples of how you have been supporting these infrastructure projects. Maybe I can invite Eugene to go first.
Well, thanks, Jennifer, and good morning to all the participants of Ecosparity. It's very exciting for me to be representing Sembcorp Industries right here. In relation to your question, Jennifer, I think it's important for us to recognize that for Sembcorp, we are at a very exciting stage of our transition. We have laid out in May this year our strategy for transition, and we have set up very ambitious targets for ourselves. By 2025, we want 70% of our net profit contributed by sustainable solutions. We will quadruple our renewable generation capacity. We will triple our sustainable urban land sales. And more importantly, we are very focused on bringing down our carbon footprint. We are committed to reducing our carbon emissions intensity by 25%, down to 0.4 from 0.554 currently. And in the longer term, by 2030, to halve our greenhouse gas emissions based on 2010 baseline, as well as by 2050 to achieve a net zero target. Now, in the course of this transition, of course, we would need financing. So in terms of new infrastructure elements that we are putting in place to support this transition, clearly is financing. And as some of you would know, and you would, and Alfonso would know, right? We have focused on raising quite a bit of green as well as sustainable financing. I think in June this year, we raised 400 million of green bonds, focused on financing renewable projects. And just yesterday, we, in partnership with IFC, great partner, we actually launched and priced our, I was told it was the region's largest sustainability-linked bond at $675 million. And it is the first done by an energy company of such a nature in the region. So aligning the financing to our strategies, and also because the sustainability-linked bond requires targets to justify the issuance of the bonds to our strategy as well, I hope that we are able to demonstrate our commitment to this transition. Some of the infrastructure projects that we would be financing clearly would be, wind and solar projects, of which in India we have a significant presence, in China as well. And closest to home in Singapore, recently we have commissioned one of the world's first largest floating solar plant, which allows us to, from on a 100% basis, greenify our waterworks. So these are some of the things that we're doing, and we are very, very committed to our transition strategy.
Thank you, Eugene. Yes, the floating solar in Singapore is indeed very exciting. And I had the pleasure of sitting opposite Eugene on that.
Oh.
Alfonso, how about you? From IFC's perspective, what are your goals and ambitions?
Oh, thank you, Jennifer, and thank you very much for having me in this panel, great panel, and for organizing this event with Temasek and BlackRock. It's really a big pleasure. So, as you know, the World Bank Group is the main multilateral climate financer in the world, in developing countries, no? And this is very, very close to our DNA, very, very close to our heart, no? And in fact, very recently we have approved what we call the Climate Change Action Plan, which is a commitment that the World Bank Group will align all our investments, both on the World Bank side and IFC side, to the Paris Agreement. So in the case of IFC, 85% of our operations by 2023 will be Paris aligned, and in 2025, 100% of our transactions. But beyond that, I think that we are also trying to influence in the market. I fully agree with Minister Wong, what he mentioned before. No, we need systemic solutions. Now, this is not just each of us independently trying to find a way to deal with this big problem and global problem. No? And in those systemic solutions, what we are trying is, first of all, to find innovative products. We need innovation. We cannot achieve this objective without innovating. And that's why we are very keen on trying to find new financial instruments that can really resonate well with issuers, with investors, and try to bring them together. So estimations, we estimate that there is a need for $100 trillion in 15 years, right, to mobilize for this objective. That cannot be done with what we have today in the market. And that's why, as an example, in 2008, the World Bank issued the first green bond. After that, 1 year later, we came in IFC with the green bond program, and today we have issued more than 180 bonds and in 20 different currencies, which is also very important to think on the currency perspectives. So this is one example, but green bonds are not enough. We need other instruments, and that's why we are very happy to have partnered with Sembcorp. Congratulations.
Thank you.
In this our first investment in an SLB, in a sustainable linked bond, because these are a type of instruments that can really resonate well, because they create the right incentives. Incentives on the issuer side to do things that they have committed with specific KPIs that are sustainable, and incentives on the investor side to make sure that they are not putting their money in something that will not comply or will not deliver with what they have committed. Important, as the minister said this morning as well, to avoid the washing issue, no? Which is the second big thing, I would say, thing that the IFC is very keen on working. So trying to define standards, trying to bring standardization to the market, frameworks that allow us to avoid this washing that could happen. No? Third piece, we need capital markets. I mean, it's absolutely clear that the public sector will not be able to achieve this goal without mobilizing private sector, and the banking industry has some limitations in providing the capital that is needed. So we need to mobilize institutional investors through capital markets, and again, issuance like the one that Sembcorp did yesterday is a good step in that direction. No? And let me, a couple of last points. One, greening the financial sector. Minister also mentioned that before. No? IFC is very convinced, I would say, and I have spoken about it with MAS many times, and I fully agree with their strategy. No? Without greening the financial sector, we will not be able to achieve this goal. So it is absolutely fundamental to really create the incentives, taxonomies, data, disclosure, as Minister mentioned, to make sure that the financial sector and the banking industry starts greening their assets. In the moment that the banking sector green their assets, the multiplier effect that it will generate in the rest of the economy is huge. No? And then my last point, don't forget the real sector. circular economy is a big thing, is a big problem in this region, and this is an area in which we are also working very hard to help some specific manufacturers and some specific sectors to adapt their strategies as well to the blue economy and to the circular economy.
Thank you, Alfonso. Very interesting. And very glad to see IFC being so involved in green financing. And we're not forgetting Eric. Hi, Eric.
Hi, Jennifer. Good morning to everyone.
Would you like to do an introduction about what AC Energy is looking to do?
Yes, of course. It's an honor to be part of this esteemed panel and in such an important topic. As a background, AC Energy is the energy platform of the Ayala Group, which is one of the largest business groups in the Philippines. We're one of the, AC Energy is also known as ASEN for short, and we are one of the early movers in renewables. We pivoted our business and strategy to focus in divesting away from thermal and focus on scaling up on renewables as early as 2016. And we did this first in the Philippines, and we expanded around the region 4 years ago. Today, we currently have about 2,100 megawatts of attributable capacity in renewables. Our core markets in Southeast Asia being the Philippines, Indonesia, and Vietnam. And we also have a broader presence across Asia and the Pacific, particularly in Australia and India. We aspire to be one of the largest listed renewables platform in Southeast Asia, and we have a goal of attaining 5,000 megawatts of renewables by 2025. We're well poised to meet or exceed this target given our robust pipeline. We currently have around 12,000 megawatts of renewables in our pipeline across the region. We also have quite a strong balance sheet with over $1 billion of cash ready to be deployed and to support our renewable rollout with a relatively low gearing ratio at the parent level. We're also one of the largest issuers of green bond, the largest in the Philippines and one of the largest in Southeast Asia. As a background, we've raised almost $1.6 billion of green bonds since early 2019, and very happy to share our experiences and insights this morning. Of course, IFC is also a big supporter. In our very first, our maiden green bond in 2019, IFC was one of our anchor investors. So definitely a lot to do in the space. We are at the forefront of the energy transition. It's also providing a good opportunity to really pioneer the green-led recovery, which all the countries around the region very much need amidst this pandemic. So we view green investments as a compelling way to lead the recovery. So happy to discuss the details of green financing and so forth this morning. Thank you.
Thank you, Eric. Before the session started, we actually asked the audience to do a poll. And if we can bring up the poll results. Wow, sounds like the audience wants to hear about everything. We have a pretty even split in terms of what the audience like to hear from this panel. And these are definitely the topics that we're going to be touching on. So maybe I will direct the first question to Eugene and Eric. Now, both of you are veterans in issuing green bonds and doing green financing. Can you share with us what are the most challenging aspects? And what are some of the key lessons learned? Eugene, you want to go first?
Oh, thanks, Jennifer. I think for ourselves, wouldn't call ourselves a veteran yet, but you know, as I mentioned earlier on, we are very committed to aligning financing to our strategic objectives. So since you know, our Investor Day in May, we have raised just over $1 billion in such financing at a pretty reasonable landed cost of about 2.58% or so. Now, I think in the journey, the key consideration, I don't want to use the word challenge, but the key consideration for ourselves as an issuer, it's how do we present clarity in our intent and our strategy so that the bond investors in our green instruments are very clear that when they invest into these green and sustainability-linked instruments, what you see is what you get, right? And what gave us absolute comfort is that as a management team together with the board, we were very clear of our intent and we were able to put out the 2025 targets clearly in terms of our intent for that transition. We were also, very intentionally put it out there to the market to say that from a governance perspective, we are all our KPIs, our management targets are all linked to those strategic targets. So I think that underpin our commitment and our seriousness to that. And then the next thing is that as we issue these instruments, are we able to demonstrate clear use of proceeds for them? And I think for the green bond, as we all know, that is clearly tied to a use of proceeds. We were able to earmark them for projects that are either under construction or we have announced. For example, like the 400 megawatt Rajasthan solar project that we are undertaking, and also the various Solar Nova projects in Singapore that we are financing. So that gives investor comfort as well. And I think the last element is for this sustainability-linked bond. We felt that the key element for success for us is that in the target that we set, it was completely aligned with our strategic targets. We did not come up with slightly different sustainability-linked targets, but we linked that straight to the strategy targets that we set. 0.4 tons of carbon dioxide emission per megawatt, which is our target as a company for 2025, which is linked to the management. So it is very clear that this is a transition direction that we're taking, and investors will be able to draw comfort from that. So I think from a lessons learned standpoint, for any issuer, being able to be clear and be committed to that intent of transition will give investors a lot more comfort in investing in these green instruments.
Sure. And be able to communicate that very clearly
That's
to the
correct.
market is very important.
Publicly as well, yes.
Eric, how about you?
Yes, just like Eugene, I wouldn't call ourselves as veterans. We're 2.5 years into this space, but it feels quite long given the volume and the momentum. I guess, first off, I think an issuer needs to strike a good balance between getting to the scale and balancing this off with the proper track record of projects demonstrated. And I think it will determine what is the optimal timing for a new issuer to come into the market. We debated this in 2019 and erred on the side of being earlier in introducing ourselves in the market ahead of the scale and the track record. At that time, in 2019, we were just at around 500 megawatts, which is not a lot of scale, 500 megawatts of renewables. So we took a bit of risk in terms of, it was a tad early for us to introduce ourselves to the market. But on the flip side, we also did not need the financing per se. We still had a lot of cash equity in our balance sheet. But we thought it would be a good time to earn the side of being early so that when the market takes off, which it has, we would already be an established name. So there's a couple of things that we used to mitigate this balance of scale and track record. Number one, we did get anchor investors, which is very important to really address the track record and the credibility, which is very important for obvious reasons in dealing with the debt capital market. So again, IFC and ADB were anchor investors of our maiden bond. Number two, I think one of the lessons as well is depending on the size of your issuance, I think for companies in the Philippines where you have strong local liquidity and investor interest, there is typically no need to get a credit rating. But for companies, corporates outside of the Philippines, I think it would be good, especially if you're targeting a certain size, it would be good to have a credit rating. And then thirdly, of course, what is almost a given, a necessary hygiene is certification. As the minister highlighted this morning, we did two. One is one of the gold standards is CBI or Climate Bond Initiative, as well as the ASEAN Green Bond, which is a framework endorsed by the various regulators around Southeast Asia. Again, to ensure that the green bond offering is and execution thereof is straightforward, transparent, verifiable, effective. Second, I think we saw an opportunity to leverage this green bond framework to strengthen our ESG culture and elevate our standards. Again, with the help of multilaterals like IFC and ADB, ACR, we took the opportunity to use this as a rallying point to really shape and strengthen our ESG culture. So that's when we launched our ESG policy, as well as the management system. And there are challenges in terms of rolling this out, mind you. I mean, especially when you are rushing to do projects, execute projects in markets like Vietnam, which have a strong time pressure because of the deadline for feed-in tariff. Oftentimes, the execution teams will do shortcuts. That's why it's important to establish early on these very robust ENS practices and policies. And while you will meet organizational resistance to change, that's simply something that you will have to overcome. Otherwise, it may have some long-term implications. The last thing I would point out perhaps is managing the tenor. Depending on the market, the typical green bond offering would be in the 5 or maybe 10 years is a bit too on the long side already. We've seen issuances on the 15-year side. Obviously, in the space of green infrastructure, the longer the better. We are conscious about matching the investment period, the investment horizon of our projects, which is typically 20, 25 years, with our financing, source of financing as well. And one of the call outs there is a risk. Let's not get too spoiled with this low interest rate environment. And that is one of the concerns. We do see some aggressive behavior in the market on the back of low cost of capital, but how long or how short is that cost guaranteed for? So I think one of the strategies we have incorporated is also having a good mix of tenors of green bonds. We have 5 years, we have 10 years, we even have fixed for life, and we because fixed for life I think is a perfect fit for our long duration projects to give us the flexibility on when to exercise our call. It doesn't give much pressure on the cash flows and coverage ratios and so forth. So I think these are strategies and optimizations that issuers should consider. So it's, again, the good news is it's a very dynamic market, and it's a strong enabler for green rolling out green infrastructure.
Thank you, Eric. And I think one of the key commonality I picked up between you and Eugene really is to make sure that this green bond and the KPIs that comes with it is very much aligned with the corporate culture and the management KPIs to make sure that you actually deliver it at the end of the day. Now, Alfonso, interestingly, Eric touched on working in Vietnam, and I know Eugene does a lot as well, and not just Vietnam, right, across emerging market. What do you think are some of the challenges or constraints in terms of green bond in this emerging market?
I think that if I have to simplify, I would focus on 2 things: bankability, so enough bankable projects, and standardization. I think that these are the 2 key drivers, probably, to mobilize the capital that we really need to mobilize, right? Bankability, because at the end of the day, there is a initial disconnection between how countries may think, even policymakers may think to do some or to prepare some projects, and what are the investors waiting for or what they are really willing to invest in. I think that there is an important gap there, and that where IFC is trying to help, what we call upstream work, that in a way is trying to identify what are the policy reforms, what are the regulatory reforms, how we can help on structuring projects in a way that it matches what the institutional investors or investors in general are looking for, which is not an easy task and takes time, but I think that that's the way to do it in a consistent and replicable way, because to me, that's one of the key things for mobilization. At the end of the day, IFC is an anchor investor, but we don't have enough capital to actually play the role that others can play, but we can mobilize others. And for this mobilization, the key thing is to make something that is bankable and replicable, so that actually after doing the first, others can come and continue doing similar projects. It happens in markets like Vietnam, markets like Philippines, or markets like many others in the region. No? And how can we actually make those projects bankable? I think that there are three things at least that comes to my mind. One, to really working on the early stages, to really thinking on what are the policy reforms that are needed. Something as simple as PPP frameworks that are needed to make it work, that are really, that resonate well with what institutional investors and what international best practices are waiting to see. No? Second, to really, as I mentioned before, to have a clear rules of the game, clear standards, clear frameworks that therefore can be used by others afterwards. No? We need to provide that in a way, regulatory security and policy security for others to come, so that they see that what we are doing today will not be just one, but will be the creation of a new asset class. Third, to probably provide the financing or to help to de-risk the projects. No? And here is where blended finance plays a critical role. So it is not just a question of creating the good project, but also it's a question of de-risking. How can we bring a blended finance to de-risk at least the initial market, or entering into new markets or entering into new sectors. No? And there is where the international community is mobilizing also a significant amount of money. No? And the minister also made reference this morning to the need of blended finance. So I think that bringing all these pieces together and then coming IFC as anchor investor creates a good combination of ingredients for a successful example. No? But this is not easy, and we know that it takes time, that we need to work, that each sector is different, that each country is different, each market is different, and therefore the replicability is not easy to achieve. No?
Thank you. Thanks, Alfonso. And Eugene and Eric, what is your strategy to overcome some of these bankability or challenges in terms of standards, governance in the emerging market? Eugene, you want to go first?
Okay, I think from our standpoint, when we look at the considerations of bankability, what we have learned is that from a renewable standpoint, in setting up a renewable project, it's a little different from traditional large thermal power plants, for example. They are not as long, there's not such a long period of time in the origination, right, to be able to put in place very complex project financing. And sometimes, the project financing itself also depends on the markets that we're in, the frameworks, as you said, the transparency of the nature, and which ties in ultimately to the security of the project. So increasingly, as we look to grow our renewables, projects in these markets, we are starting to see how we could get comfortable in the development process and increasingly start to use corporate-based financing for that. Now, corporate-based financing for that, such as using green bonds or sustainability-linked bonds, allow us to quite quickly deploy these funds. I could use a green revolving credit facility, for example, to draw down to fund the projects while I take it out with a bond later on, right? And these financing gives a lot more flexibility and options in funding these projects in these markets. Also, renewable projects could come in a various scale, right? You could range as small as 50 to 100 megawatts to almost 500 to 600 megawatts. So because of that, in terms of bankability on traditional project financing, it could be quite tough to meet the requirements of all the range of projects. So in summary, we are probably moving towards more corporate style of financing and employing our balance sheet a lot more in financing these projects. Of course, what we pride ourselves is that we have built up the necessary technical as well as commercial capability in assessing these projects to being sure that they are commercially viable, they meet our required returns, and with that we would have the confidence to employ corporate financing or our own balance sheet behind it. We have seen very established renewable companies use such a financing strategy to a great degree of success, and one example is Ørsted. Of course, a lot larger, but I think they provide a centralized corporate financing model for many of us to follow and to model our own financing around that. So I think from our standpoint, that is one key element in changing the shape of our financing and driving the renewables growth.
Thank you, Eugene. So moving slightly away from the traditional project financing because you need speed to market.
Yes.
Right. Eric, what is your view on this?
Yes, I definitely agree with Eugene's tact on corporate financing. We've been doing that, and that's also the reason why we've been aggressive in the green bond market. I think in these projects, it's critically important to get to the proper scale and diversification, especially in relatively high-risk markets like Vietnam, for instance, where you do not have a global standard bankable PPA. Having said that, Vietnam is a very interesting case study. I remember back in 2018, there was a lot of pessimism or cynicism in terms of the ability for Vietnam to launch successfully their renewables program because of these imperfections in the PPA, particularly issues around curtailment risk, issues around termination clause, and the arbitration clause as well. Investors want a SIAC, a Singapore arbitration, and not Vietnam. So those were the three key issues. But having said that, notwithstanding the quote-unquote imperfections or less than ideal PPA, look at what happened 3 years hence. It took everyone by surprise. Solar projects getting well above 16,000 megawatts of installed capacity in just 3 years, and wind, I heard, is tracking more than 5,000 megawatts, notwithstanding these imperfect PPAs. And I think the market was able to tap a few things. So number one is local Vietnamese financing, although of course that pool will have its own limitations. Number two, you've got regional banks who are more attuned to emerging market risk, and that's the strength that we also leveraged based on the Ayala Group and ASEN relationships. And number three, there's also the EPC financing. The construction companies would also do some construction financing to be taken out later on. And then number four is along the lines of what Eugene said, which is using balance sheet financing for the corporate. So we did use almost everything in that portfolio of options in our projects in Vietnam. We have around 1,000 megawatts worth of projects together with our partners in solar and wind. But I think the key question now is it sustainable? One key risk is that if you are the Vietnam government, you would now say, hey, there's nothing wrong with my PPA, right? Even if these global financial institutions are saying you have to improve on these three key points among others. I guess the open question is it sustainable given the magnitude that is required by the energy transition if we're really going to be serious about transitioning away from thermal into renewables? We've seen nothing yet in terms of these megawatts or gigawatts that have been installed. So I hope that the government and policymakers will not be complacent with their existing practices or point of view on how to structure PPAs, because at some point we will need the global financial community to also support these developments. But I agree, one significant opportunity is to tap the debt capital markets, and for that you really need a lot of scale and diversification, and that's where the large corporates can play a role.
Thank you, Eric. And I think we are running slightly short of time. But before we go, I would like to touch on the point of collaboration. And Minister Wong this morning talked a bit about it. But I'd like to hear from each of you, your perspective, in terms of collaboration among the public, private sector, companies, corporate, and government. What do you think is required in order to accelerate green financing?
So, I mean, I think that this, as I mentioned before, this agenda is totally impossible to be to get it or to achieve the objectives without that collaboration. No? But the collaboration, I think, that needs to be focused on what do we want to obtain, and what is the final objective. No? I mean, thinking, for instance, electric vehicles, to bring up one example. No? This is something that we know that can have really a huge impact in this agenda, but we also need that it will require policy incentives. Policy means maybe taxing those vehicles that are more polluted, for instance, to really create the incentives on the demand side to change, and also incentives on the production side, so that we can really start working on the supply side and therefore bring the financing that is needed. So I think that every single aspect or every single example that we want to take, we need to really take one step back and see, okay, what are the ingredients that are needed to make it happen, and then put all the different ingredients together. No? If we run on our own, we will not achieve it.
Yep. Thank you.
Okay, I think from our perspective, I do think one area in which, as a whole community, the combination of governments, financiers, as well as industrial players like ourselves, is to focus on the element of energy transition investing or financing. Now, we've been focused a lot on financing the growth of green, right? But I think we cannot forget that there are many economies where baseload is still run by brown. Okay, and for many of us to help, drive through the transition in our own portfolios, as well as help each of these economies drive through the transition, there will be the need to look at ways in which we could release capital out of the brown side of things, so that we could continue to drive growth in the green side of things, and also for this new capital, right, in terms of financing the brown side of things, to also look at ways in which we could abate the carbon and to bring it and to bring the carbon down. And then I believe that once we have cracked that code of how as a community we are able to do that, we will be able to see the transition take place more orderly, and also actually accelerate the ultimate transition of many of these economies towards green. I think from a Sembcorp's perspective, releasing the capital is important to drive renewables growth, also to drive, next stage investments, such as looking at storage out of our UK business, looking at carbon capture, which are many technologies that we can bring back even to our home country in Singapore, in line with Minister's mention of the green plan, right, for Singapore, and to help support the drive towards a green and renewable-driven power in our economy. So I think that element is quite critical, coming together to look at how we could bring forth energy transition financing and investing to help accelerate this transition.
Thank you, Eugene. And finally, Eric, before we go.
Yes, Jen, I think there's already been a lot of push by various governments, whether it's Vietnam, Indonesia, Philippines, in terms of really accelerating renewable energy by determining aspirational goals. I think all the three countries tick that box. But in terms of shaping or defining the policy and execution, that's where there is a difference among the countries. Vietnam excelled a lot in terms of execution, all the way to execution down to the local government level. I'm hopeful that the Philippines will get there during this second wave of renewable rollout in the Philippines. Indonesia still needs to clarify and craft its renewable policy, notwithstanding the fact that they already stated an ambitious goal. I think just to focus on one point, one particular policy that's so critical is the incorporation of energy storage, because without getting this right, renewables can only scale up so much. To unlock the potential of renewables, to ease up the grid and so forth, governments and private sector need to get energy storage to really be optimized and effectively incorporated in the grid. And that's when you will see a scaling up of renewables. That's the challenge. And then maybe 5-10 years from now, it will shift to green hydrogen, how to incorporate this into your own system planning. So I think governments and businesses have to evolve their practices and their strategies to incorporate these new technologies that will really enable the energy transition.
Thank you, Eric, and thank you, gentlemen, for joining me today. Thank you, audience, for participating in the voting and the Q&A. Thank you.
Much obliged. Thank you as well, Ms. Tay. And of course, to our panelists for that engaging conversation, a very holistic view, I think, and approach to the challenges and the opportunities ahead of us. So with that, we are going to take